What's up, YouTube? It's Joe Catchpolia sitting on the couch investing in fractional real estate online again. One of the reasons I'm always mentioned I'm sitting on the couch, I think there's this big discussion about, passive income versus active income. I always think that distinction is a little flawed. Like I like to think of money as being couch money, or do I have to actually get off my couch to make some money? Because I don't mind spending some time on my investments and doing some different things, and maybe sometimes even making a phone call if it means I'm going to get some outsized returns. But if I have to run around and do stuff and go fix things, that's a whole different level. And so for me, that's why I actually have really enjoyed some of the investing I've done on this platform. I'm on Lofty today, but on this platform and several others, because it is, you can it can be it's not passive, but it's completely couch money, right? It's like I never have to go anywhere, I never have to talk to anybody. Um, and if I am, employing a little bit of knowledge and doing some research, hopefully I get some outsized returns. And I think I've showed a couple of times where making some little trades made decent returns, like much more so than what you're going to get in a passive, a purely passive property. And then, some of the deals that we have on here that we're just invested in, not as a trade, but really to hold, are also seem to be yielding some good returns so far. And I think that that's, I just think it's noteworthy, right? So whenever I'm like, you found me on the couch again, I'm just sort of alluding to that, right? Like we're not having to work too hard, to get a little bit more money than maybe we should. So one thing, last night I talked about looking at some short-term rentals. I'm going to continue that. It's a strategy that I really like. Oh, this is interesting. It's not showing up on these short-term rentals, so let me go back to there. There is one new property that hit the platform. I don't know, in the last week. Let's see. I found it. They put an announcement in the Discord, but usually the new properties are showing up without any actual price because they're not being initially sold. And so I was really excited when I heard about this one coming. It is in Castle Hills, Texas. If you are not familiar with Castle Hills, let me just switch this map on for you. This is where it is. Uh, but if you zoom out, it's actually a small city that's fully surrounded by San Antonio. And so I actually live oop, right around here somewhere. So I live really close to Castle Hills, drive through there all the time. I sell a lot of short-term rentals in that general area. So I was really excited to see one. It's one that I think it's a market I like a lot. But let me go into the market. You can see it's a very small town, and so the town itself has a shrinking population. But it's within San Antonio, which has just been growing fantastically, and it's one of the reasons that I'm here. And also, if you look at the MSA, also continuing to grow at a really high pace. Um, I think that's the main reason I moved here in 2018, in large part to take advantage of low cost of living, real estate prices, just really great deals. And so, like, if you look at the relative price of homes in this market, compared to the type of city we are, which we're the seventh largest city in the U.S. It's it's just a great value, and I think long term this market's going to do well. So I was really excited to see a short term rental here because I have just a lot of experience, helping clients with those, investing in this market myself, and I was pretty excited about it. Um, Unfortunately, it popped up, had relatively low yields, and so this is one that I think is going to be a great investment at the right price. But I don't know that we're there, right? I don't know that this underlying asset price. I'm going to do something a little different today, because I can show you my MLS here, which is okay. So this is the properties. This is the last time that property was listed. It was listed at 699. It expired. Several of my clients considered this property, and just passed on it because it was the price was, in my opinion, way too high, especially relative to the income that this particular property was going to generate. So let me show you the air DNA on this. This is their, it's been operating just 362 days, so not a full year of operations yet. Normally, your first year is going to be a little bit low. And so, you know, this is just Air DNA pulling this data. So, one of the things that's interesting is this doesn't match up exactly with the info that they provided. This is actually higher. One of the reasons I think that is in Air DNA, they're pulling the gross revenue. And so it shows like the cleaning fees, even though those are just passed through. But so, um, you know, they shared their trailing 12 income with us. And you can see it was, let's see, they have, I never like the way these are set up. I don't know why, but you know, you can see they have their year-to-date net income. Uh, you know, not particularly impressive relative to the price of the property. But you can see, you know, they had some good months, you know, June and July were pretty good. But if you look at all these, you know, maybe they're averaging, let's be really generous and say they're averaging 8. Yeah, I guess that gets you to the 96, right? But I don't think that that's really true. Um, I didn't actually cut and paste because it, regardless of where that number is, even if they could support this number, Um, you know, normally what I'm looking for is, well, let's do the math on it, right? So it's 92,900 divided by 740. So we're looking at a 12.5%, you know, 12.6% revenue to price. That's in my mind really low. You know, if I had, you know, I want at least, you know, if I'm buying something that's operating, if I'm not getting 16, 17, 18% right off the bat, I'm not super excited about it. Especially in a market like this where I know that that's achievable. So let's say 92,900 um, divided by point, let's say 165. You know, that implies like 560,000. When I first saw this one coming up and I had done this, I thought, you know, I'd be really excited about this in the mid fives. I think that, you know, it's operating, you know, they have some reviews, you know, that'd be a price where I'd be excited about it. One of the things you might be like, well, okay, that's great. That's not available. This is a property that my team just sold. It was one of my clients. I helped buy this, I don't know, just a few years ago. It sold fully furnished, operating. It was bringing in. I always have to move this to close that button. It was bringing in around $120,000 of top line revenue. Sold for 688, and so you know when we look at that math, right? Like what 120 divided by 688. You know, it was 17%, and it was, you know, uh, a larger property, um, very similar area. You know, within a 5 or 10 minute drive, actually didn't have the issues with proximity to the highway that this one does. And let me show you that. I didn't. I know I'm kind of jumping all over the place. Um, and doing just sort of shorter video here today. You know, I don't want you to think I don't like this property at all and don't invest. I think that this is one that I'm going to put on my watch list. And if tokens get down to around $35, I think I'll probably be excited about this, depending on a couple of things. And I'll share with you what those are. Oh, yeah, but let's look at this on the map and I'll show you. Well, and you can even see it from right here, right? Like it is just it's the first home by the highway. 410 is a major highway. You know, so whenever I see something like this, I'm like, okay, let's check this property on realtor.com because they will give you a neighborhood noise level. So let's search that and take a quick peek. And you have they changed the way they set up their tabs. So I just got to find property details, city, Nearby home values. Let me just search for neighbor. There we go. They have this little tab over here, and I've been missing it lately. But they have, okay, noise level right there, right high. This is one of the things I always want to look at if I have any reason at all to believe. And really, I should probably look at it all the time because sometimes there's stuff that you're missing. But it's no surprise, right? You're this close to what is a very major highway, busy, all the time, and you're right by the service road. So luckily, the pool is on the far side of that, right? They at least built this smart, but I think you're going to have some issues there. And so that was what I was just saying, it didn't have anything like that affecting this property. So like in my mind, it's really hard to get behind buying this one at 740 when we just sold this one to somebody at 688 with bookings in place with a much higher trailing income, and more beds, more baths. I think similar square footage. Actually, it's a little bit smaller square footage. Um, Great pool, great amenities. Like this just made me, it's hard for me to get excited about investing in this property here when that's the case. And then so let's look at some other aspects about it too. Their projected return, they have a negative value. Like this rent yield. If this was a long-term rental, I'd be really excited. Not really excited, but 8% is perfectly fine, right? You have a very stable strategy. It's less risk. It's not so much buying a business. And if I got an 8% yield on a property here in San Antonio that was a long-term rental, I think I'd be perfectly fine with that. If I thought I was buying it at a price, where I wasn't overpaying for the property itself. But if I'm getting this kind of yield on something and I'm not getting a discount on it, and it's a short-term rental strategy, which is, that's usually going to be your highest income strategy you're going to have for a property. Um, I want that yield to be significantly higher for me to want to jump into this. I think it's so, recap, I think it's a nice looking house, and I don't even really take you through this. It's a decent house. It's not fully updated or anything, but it is a nice house in a nice location, good size. Well, nice location generally, right? Like Castle Hills is very um well located within the city. But I don't love that you're just right there on the highway. And I think uh, I was actually surprised that they have quite a few negative reviews, like way more than I would want for something that's relatively new. Um, their average 4.7 is really, it's not that bad, but they had a lot of cleanliness and broken stuff type reviews. There really weren't as many noise issues, and which is what I expected to see a lot of. I think there was really only one or two that mentioned that. So that was actually, a good thing to see that that's not, maybe that's something that you can overcome. But just because, even though it's in a market I really like, and it's a business plan that I think works great here in San Antonio, especially in that centrally located area. It's close to the airport, close to 410, so you can get just about anywhere relatively quickly, because of our, the way our loop system works here. It's just unfortunate, like I think the price is just way too high. And I don't know, I think they bought it off market because this isn't a sold listing. This is an expired listing. So I would have hoped that they got a real discount, but then maybe they spent some um, money renovating it, although it looks very similar to what the pictures look like now. So I'm not sure where that price comes from. Um, just for me and this is one of the things, like I kind of wonder when I'm looking in other markets. I do want to actually just look at what does Zillow say about it, because when I look in other markets, that's what I'm looking at quite a bit. Um, and sort of give it, trust. Okay, look at that. Yeah. Assessed value, off market, none, rents estimate. It's not giving it its estimate. I wonder why not. It's just giving us the assessed value there. So let's look at homes.com, see if they'll give us one. But just from my own knowledge of working in this area, okay, 632 to 745, that's super interesting. Um, so they're just listing it at the high end of that price. That's surprising to me. Let me look at, oh, we already had it up on Realtor, right? What does Realtor have for estimate? 675. All right. I mean, I think this is getting a little bit closer to reality, but still more than I'd want to pay. It's a really nice sized lot. And that's one of the things too, is like sometimes when I'm looking at these properties, I'm looking at it as, what would I want to pay as an investor? And so, looking at the income of that property and knowing the other properties I can get that are compared to them. But, maybe this sells better to an owner occupant. Although my guess is it really doesn't, right? I mean, the reason I think there's a lot of people go to look at this and that highway is just creating more of a negative externality than maybe some of the platforms are picking up. I mean, if it was going to sell for 675, somebody would have made that offer. Let's see, how long was this actually up for? Let's see, listing and property history. They had started at 720. But they were at 699 for a long time, right? Like, I mean, they kept it at that price for a very long time before it was withdrawn. Wait, what is going on here? Oh, is this the current owners that were trying to sell this actually? Let's look back at that listing and see if we can see the owner info. So they weren't able to sell it for that price, and so then they went and listed it on the platform. Is that what's happening? Can I not see I'm in the client friendly view because I don't want to share stuff I'm not supposed to be. Owner, let's move this here. Okay, so let's look it up on CAD and see if they've owned it that whole time. Well, I don't think we have to. I think that we can just look back in these documents here. Let's see. Yeah, let's look on CAD. So we just go to bcad.org. This is the good part about looking at a market where I'm in all the time. It's also, maybe I'm not going to buy properties in San Antonio because I'm here and I can just buy better deals myself. Maybe that's not fair to really compare it to what else, the other properties that I have access to, right? Because of that. Let's see. All right. Look at the deed history here. Yeah, okay. So they've owned it since 2021, listed it, had it on the market a very long time. It didn't sell. Do they mention that this is an Airbnb? Yeah, previously operated as a profitable short-term rental. What am I missing here? I feel like, okay, listed at the end of last year, took it off the market, and I said previously profitable Airbnb, but it seems like actually, let's look at those months and see. It seems like actually they were, well, okay, maybe they had a loss February, so that's why they said previously. Um, so that's interesting. So one of the things that to keep in mind is like maybe some of what's happening here is because it's listed on the market, um, it was hard to operate it. When you have showings and maybe you're having open houses and maybe you block off days and guests can't come there. That's something I've run into before if people are trying to continue to operate and sell. So maybe that's what's going on. Like to give them the benefit of the doubt there that like that's why these aren't just fantastic numbers. Um, it's really kind of unfortunate because like I said, I love the San Antonio market. It is my favorite market. It's a big part of why I moved here. Um, I think that short-term rentals here are still working well. I know they're struggling in a lot of the country, but if you have the right property, have a nice large property with a pool, they still do reasonably well. This just one, when you compare it just on a pricing basis compared to ones that I'm just, see every day in the market, I just don't see it as being a great deal. And then, okay, when we actually look at the return, the yield that we're getting on it, um, it's really hard to get excited to invest in this one. So, like I said, I'm gonna put this one on my watch list. If the tokens come down to, I don't know, somewhere around 35, I think is where I'm gonna really take a hard look and probably buy some. Um, I don't know that that's the right price, and so don't just jump on it as soon as it hits there. Do your own due diligence, just like we talk about every time. Just because it's right or wrong for me doesn't mean that's the case for you. Maybe you have other reasons for wanting to buy it with this yield and for what it is. And if that's the case, more power to you. Like I said, I'm not ever trying to tell you what you should be doing. I'm just trying to share my knowledge and let you know what I'm doing and what's working for me and what's not. As you've already seen, if you've watched some of my other videos, I do make plenty of mistakes. Um, and in my mind, though, at the moment, buying this one at this price would be a mistake for me because I do just have access to what are just seem to be objectively better deals, unless there's something I'm missing. And that's one of the things. There could always be something that I'm missing here, right? Like maybe it is a really large lot. Maybe there's some future potential. I actually don't get into Castle Hills, even though I drive through there all the time. I much prefer to buy and sell and use properties that are in San Antonio that are so when you're looking. Oh, this is not the Castle Hills map. When you're looking at San Antonio, it is. Well, I don't have it, but this is Castle Hills right here. But as we sell a bunch of stuff in this area, I am more comfortable with the short-term rental rules in the city of San Antonio than in Castle Hills. Although Castle Hills does have some pretty straightforward rules now. They just got there a little bit later. Um, one of the things they're doing, it's just they're doing it just a little bit different, and so I'm just not working with that as much. So it's one thing I'm a little bit less comfortable with. Um, it just seems to me that in this particular scenario, there are there are just better opportunities to be had, and I think maybe this is unfortunate to say, but it looks like this might be why this is being put on the on this platform, right? Is they weren't able to sell it in a traditional sale for what they were hoping for, and now we've got it on here for more. I'm guessing that they have. Well, let's look at this. I don't have to guess. We can look. They must have gotten an appraisal, and the appraisal came in that high. I mean, that's how, without having an appraisal, you're not able to do that. It's one of the requirements on this platform. So let's get down there to the. They might have had it on the first page and I missed it. But, okay, here we go. Indicated sales comparison approach 705, cost approach 704. So I mean, they don't even have. So I guess they're, this when you do the appraisal, it's not taking into account um, your furnishings, and so maybe they're saying, well, we're a going concern. We have this extra furniture, so we're going to charge you more for it. When you buy these in like that one I just showed you that we sold, like people aren't giving you some huge premium for furniture that's in place, right? You basically get yard sale prices for, the furniture. And so, we're often, you sell the property and you might get, a 5 or 10K additional value because it's fully furnished. But it's very rare that we're getting a 40K bump or something like that. So, yeah, that's a surprise to me that they want to, go that high over. Hmm. I don't know. I hate to be so negative on a property in a spot that I'm really excited about, but yeah, it is just not for me at that price. When we look at the order book, that's your market cap at that price is 765,000. Um, what if we got to $35 token? 35 times 53314. Okay, so maybe we don't even have to get down to 35, right? Maybe it just gets into the 30s and I'm excited about it. Your yield still will be relatively low, but maybe this comes up too as they're operating it full time, not trying to sell it and operate it. It's tough to know, right? It's tough to know if that's really how it's going to work or not. That's why I am buying a lot more of the properties that are being sold after the fact than I am buying initial ones. I think in general, it's pretty uncommon for these properties to pop up in value. You've seen a few like this South Solano is one that I thought was overpriced when I first looked at it, and it's just shot up even more. But so you've seen a few that have gone up, but it's much more common for them to dip in value, and so that's what I'm just waiting on most of the time and buying those discounts anyway. If it's a property that I think is super exciting or has there's reasons to really like it right out of the gate, I might buy it. I think the most I've bought any tokens for is maybe $56 or something like that, 56 and change. Most of mine have been in the 20s and 30s, and I think that might be, if these tokens ever get to that, I think they'll be a great value. Um, assuming things haven't changed. But otherwise, I'm gonna pass on those for now. In any case, I just wanted to share with you this one that I had dug into a little bit to let you know what I thought. Um, until next time, I'm going to just keep making mistakes so that you don't have to.